This podcast is brought to you in association with BSE and its investor awareness initiatives. BSE's revival stands as one of India's most noteworthy turnaround stories in recent times. From being an institution almost written off to becoming a key player once again, its transformation has been recognized by the market, with its stock price surging nearly 800% in the past 2 years. At the heart of this revival is R. Sundaraman, Managing Director and CEO of BSE. His leadership has given the exchange a fighting chance to reclaim its lost glory. As tighter regulations around the high growth futures and options segment kick in, the big question is, can BSE sustain its growth momentum? To explore this and much more, we have Mr. Sundaraman join us in today's episode, which is part of the BSE Investor Week special podcast. I am Nishanth Vasudevan, Markets Editor at the Economic Times and your host for the episode. Welcome to the show, Mr. Sundaraman.
Thank you so much for having me here, and it's my great pleasure.
To start with, now it's almost been 2 years since you joined BSE. At the time you had joined BSE, it was almost kind of written off. But after you have joined, the share price has gone up almost 800%. How has been your journey so far? Could you share with our listeners your journey and what are the things that you did to kind of turn around the operations at BSE?
So, good question that you have asked. When I joined in Jan 2023, a few days before my joining, there were a lot of press articles. The media was asking, will this man be able to make the elephant dance? Will this man be able to make a difference to the sinking ship? For any newcomer, this could be a sense of this fear creation if this type of articles appear in the media, but that's what it was. So when I joined, what I found as an exchange, to put in a nutshell here, was highly dwindled cash market share, no opening at all in equity derivatives, currency and SME we were present, but there again the deterioration had started. Mutual fund is in one area where we had good presence, but a lot of operational issues. Did not sound like a great place to be in. Notwithstanding that, when we went ahead and assessed what are the infrastructure that were available, old building, old population of employees, aged technical infrastructure, again set of dampeners. So against this backdrop only I started my journey here. I've always been very strong in my opinion that anything that fills a gap in the market is what is going to sell. So then I had to therefore find what could make sense for the market participants if I have to bring in something which they'll be able to find it as useful to come to BSE. We call it as voice of customer. So in the first few months, I had the opportunity to meet around 300 to 350 brokers and simply ask them one question. What is that if I do, you will start looking at BSE and you will start trading? So based on the voice of customers, we made certain changes to some of the parameters in the cash market. And we also started offering equity derivatives with Sensex and BankX over a period of time. So Jan to March was on assessing the requirement. And March, we informed that we will be going ahead with this relaunch. And May onwards, we launched. And it started showing signs of success from the beginning itself. Around 8 members were capable to trade BSE in the beginning. 2 software vendors were supporting us. From where no FPIs were there with us. From that place, today where we are in, we have around 60 lakh UCCs. All of them don't trade. Around 600,000 UCCs trade. 450 members plus in the equity derivative segment of BSE. All software vendors, front office and back office, support us now. And it's not been an easy journey. There are quite a few headwinds. We were able to convert every one of those headwinds into a sort of a tailwind scenario, and we had come out successful.
So one criticism that when we talk about the BSE, I mean the turnaround is certainly there. One thing that people talk about is the absence of too many large FIIs in who trade in the BSE FNO segment. So what have you been doing to get the large FIIs, the large trading desks to BSE?
Good question. Today, I already have 120 FPIs trading with me from almost nothing. All the big names that we will aspire to have, they are already in. The one difference is in the other exchange, they have been trading for a very long time. So they have a big presence. Here, as you rightly pointed out, when we started, there were nobody. Since we have brought many of them in, they are in various stages of commencing to trade. Some of them are in the process of membership getting approved. Some of them are in the process of membership approved, but they are in the process of ensuring their setup in India is working. And some of them, the setup is also there, but they have to take colo racks from us and bring in their servers. Some of them already have the colo racks, but their servers are in the offing. For some people, all of this are done, they are in the process of testing. So they are in multiple stages. Around 40 to 45 FPIs are in the pipeline, and 120 are already in. So that's where we are with regard to the large institutional participants in equity derivatives.
So are you disappointed that just as a lot of things had started looking up, you have a tighter FNO framework which has come. Has it really upset your growth plans?
The regulatory process is an ever evolving process in every part of the world, including India. One thing which is good about India is it's a co-created process. So there is good amount of consultation. Only thing what we need to do is for every change, we should find how best I can make the change to contribute to my goal rather than being detrimental to my goal.
In your assessment, what will be the impact of this tighter framework on the markets, the volumes, and the activity?
Now, as you would recall, while the premium turnover versus cash market turnover percentages continue to remain almost the same, the percentage of retail participation in index options had shown an upward trend in the past 5 7 years. And some studies also revealed that probably some of the retail investors are losing money by trading options. So there was a concern regulatorily on two areas specifically: whether there is a overheated trading that is happening, two, whether there are any systemic issues arising out of this trading pattern. So after discussions with the market participants and taking feedback, a set of regulations today, which have some 6 points, have been brought into place. Five of them are going to take effect from November 20th and one from April 2025 onwards. Broadly, if we look at it, increase in the contract size, requirement of upfront payment of premium by the buyers of options, non-availability of calendar spread benefit on expiry days, increase in the margins on the expiry date, the exposure limit margin, and one contract per exchange as weekly expiry, balance all becoming monthly contracts. BSE has today two weekly contracts. One of them is Sensex and other is BankX. While both are very liquid, Sensex is much more liquid than BankX. So the call that we have taken is Sensex will be the weekly product for us, and BankX therefore necessarily will become a monthly product. Even before the circular came, our efforts were on in educating the market as to how monthly options are better products for various reasons, and why the market should consider monthly products rather than weekly products. So those efforts of ours will continue, and we are very hopeful that there will be traction for our efforts. The other product, Sensex options, which is a weekly product today, will continue to be as a weekly product, and we expect some amount of stabilization and then strengthening in the product and its volumes. So we feel that With our efforts, we will be able to make the right people and right participants trade the product in right maturities in respect of Sensex.
Do you think, at least in theory or in practice, do you think there is a need to bring in some kind of an eligibility requirement for retail investors in the FNO segment? Or are we just doing good at the moment?
See, we have embarked on quite a few changes in the recent past. So, as you know, the true to label circular is one from SEBI, and second is the STT increase. Third is this host of five requirements which are coming into effect from November 20. Fourth is what is going to come into effect, the intraday monitoring of position limits from April 2025 onwards. So recently, since many have come, we do not know what is going to be the impact. If the impact, what comes out of all these measures, is the desired impact, then there will be no further need for looking into any further changes. If the impact is not sufficient, then certainly the regulators will have the prerogative to relook into what they should be doing across. That I think will be possible to comment only when we know what the impact is, which would require at least 2-3 months for us to wait.
Right, right. So coming to another high growth area for exchanges, which is the SME platform. Apart from the growth element of it, there has been a fair bit of criticism about the quality of companies on the SME platform. Also, there are allegations of widespread manipulation in various SME stocks. What are your thoughts on the topic?
Yeah, indeed, in the recent past, quite a few cases have been discussed in public media. Some of the disclosures made in the DRHP were taken up and they were discussed in great detail through YouTube videos and others, pointing out some of those disclosures as situations which cause us concern. In any regulatory process, it is very important to understand one, it is ever evolving. Two, the regulatory process should be objective, transparent, and uniformly applied across all situations so that nobody has an opportunity tomorrow to blame any partisan outlook on application of regulations. So, the best way to manage every criticism is first, objectively look into the criticism. Two, find out any safeguard measures that we need to do to protect the market if there are concerns. Third, learn a lesson out of it and just don't make it as individualized. Show me the case, I will show you the rule. No, that's not a good thing to do. Make those learnings into a regulatory change process because it's a well accepted principle that regulations will be continuously undergoing changes. In respect of the listing process, merchant bankers have been playing a wonderful role and they are expected to exercise due diligence, and that's why we are having them in every issue. In respect of the SME cases, the specialized merchant bankers, in fact, BSE had organized a meeting of all of them to chat with them and encourage them and to requesting them to ensure only quality issues which process the due diligence gets filed with the exchanges. The listing process in India is a disclosure based regulatory regime. That is, the corporate which is raising funds will disclose all about itself, including the risk factors and the issues, so that people who participate into the equity of that company do it after fully understanding where they stand. That is one important point to ensure, and whether adequate disclosures have been made so that the investing people are fully conscious and aware of the risk that they are getting into. One another good thing about the SME regulatory setup here is any company whose paid up capital is below 25 crores is what can come for SME listing. Its market cap can be anybody, anything, because the paid up capital and the market cap are not relatable in that sense. Because a script which is just 1 rupee paid up capital face value can be trading at 1 lakh rupee also or 1000 rupees also. So therefore, that is one thing good which is about this. Only 25 crores can come in. And also, there is a good amount of restriction on retail investors from getting into it. The minimum ticket size should be 2 lakh rupees as against 15,000 for a normal IPO. So clearly the regulators have indicated already it is not meant for an arm janta retail investor to get into it. It is for sophisticated investors. It is for people with a risk appetite because SMEs can have significant risk. That, along with a strengthened disclosure regime and an objective and transparent regulatory framework, which will be ever evolving. Today we will find this is right. Tomorrow we'll find we need to put more. Day after tomorrow we may feel it has to be something slightly less. That is fine. So long as the continuing process of regulation making in India, which is a co-created process, continues in that fashion, I think we will be able to manage it well.
Do you have any advice for retail investors? A lot of retail traders have come into F&O trading big time. Do you have any advice for them? What are the things that they should keep in mind?
See, in terms of number of investors, when I look at it, see, the term retail investor is to be properly defined. If a person trades, even if he is an individual, say 1 crore premium every week, should we call him as an individual investor or should we call him as a retail investor? And presuming that we are able to clearly identify who is the retail investor, there are good number of investors today who are in the mutual fund segment and good number of investors today in equity. I feel that people who want to participate into the capital markets, they're doing it because they're finding it very interesting. They feel that there are good number of safeguards to take care of them from a regulatory perspective. They also find it is easy to have access not only to the trading but also to the information associated with trading. So these are very positive aspects of a small person interested in coming into participation in financial market to convert his household savings into financial savings. But what they should be very clear about is they should be wary of the cyber crimes. And they should also be wary about tips being given to them by somebody. If somebody is giving tips, it's not acceptable and believable. Why? Why he should give a tip if he knows, if he's so confident? He should be trading and he should become a billionaire. No? So what is too good to believe should not be believed. And fourth is very important. Basic principle. Whatever you trade, you should be knowing it. This is a very important principle. This principle applies across everything, not necessarily only equity derivatives. It applies to equity and also to mutual funds. If my time horizon and my risk appetite are very low, even in mutual fund, I should be very careful which mutual fund scheme I put. I cannot be putting in a thematic fund when I am very risk averse. I should be putting into a broad-based, large cap fund where already significantly large amount of funds are being managed by the asset manager. So no investment is possible without a study. Investment without understanding and education is a dangerous thing to be done. Please be careful, understand what you are doing, and do whatever you understand only.
Great, sir. Those were really interesting insights. Thank you, Mr. Sundaraman, for being a part of the show.
My pleasure, sir. Thank you so much.
That wraps up today's episode and this special series. I hope our listeners gained valuable insights from our guest today. Thank you once again, Mr. Sundaraman, for sharing your perspectives. And a big thanks to our listeners for joining in. This episode was produced by Surohini Jain and Vinay Joshi. Sound designed by Rajas Nayak and Amrit Reji. And executive producers Anirban Chaudhary and Arijit Burman. This is your host Nishanth Vasudevan signing off. We hope you like this special series and look forward to bringing more such interesting conversations soon. Until then, keep listening.